Lisanne Sonders, Chief Investment Strategist and Senior VP at Charles Schwab, joins us now to discuss all of this. Lisanne, are you surprised that we got to, I know it's a one-day's reaction, but still 5% inflation print and to see bonds board and equities very settled, is that surprising?
Well, it was a little bit hotter than expectations, but just the notion that we were getting a hot inflation number, I think, has been built into expectations. We're certainly right in the meat of the base effect piece of it. We know where the hot spots are in terms of both month-over-month growth, year-over-year growth. What was interesting is what we started to see in the housing components, the traditional rent, owner's equivalent rent, which collectively account for more than 40% of the CPI. So I think key going forward is how quickly can we ease some of the pressures associated with the reopening, the supply chain disruptions. As an offset, we're now seeing a little stickier rise in a very weighty component of CPI. I think the market has continued to key off what the bond market is saying about the near to medium term future of inflation. And with a very stable 10-year yield, I think that's become very important for the stock market to key off of.
Is the bond market, Lisanne, saying that not only is inflation going to be transitory, but perhaps this rebound in growth might be somewhat transitory too? And if so, what does that mean for the outlook for the S&P 500?
So I think, yes, the bond market may be reflecting what is a very high likelihood that both in terms of overall GDP as well as S&P earnings, Q2 is the peak growth rate, not peak growth in level terms, but the peak growth rate. And that historically has meant you tend to see a leveling off in metrics like the 10-year yield. You also tend to see a bit of a change in leadership and some churning. And I think to some degree, that's what sits behind some of this latest rotation, which has been ongoing for longer than that. But yeah, I think the peak growth rate story is part of what we're seeing recently.
So Lisanne, how does this tee us up for the Fed meeting next week and the beginning of taper, or at least beginning of talk of taper?
So I'm guessing there won't be much with any formality in the statement, but I'm also guessing that during the press conference, Powell will probably be forced to address a lot of questions. So maybe we get a sense that there's the telegraphing of the telegraphing, maybe nothing formal at the June meeting, maybe hints about formality coming at the July meeting, which of course would just be telegraphing what might not likely be any change to the balance sheet until something closer to year end. So that's my best guess at this point, a week ahead.
Shepard Smith here. Thanks for watching CNBC on YouTube.